Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, and we represent investors buying in the major areas of Oklahoma City and Tulsa. That's our two big cities that we have right now. And I did a previous video about should I wait or should I buy now? One of the main questions investors are asking. But the other thing is I'm an investor. I invest in multiple things. I invest in the stock market and mutual funds and real estate, just like a lot of people do. And the thing is like everybody else, I'm going, where do I get the best return for the buck? Where do I get the most return? How can I beat the rate of inflation, which right now is running at about 8.3%? So let's talk about that. Well, there's the run scared and put the blanket over your head routine, which is I'm not going to spend any money. I'm just going to keep it stashed away and just in my rainy day fund. And of course, we all need some degree of a rainy day fund. You need 90 days of bills. You need to have that kind of a basis there. But if there's an overabundance of money over that particular amount of money, understand that if you do not invest that money, you're losing money every day. In other words, if inflation is 8.1% and you're not making any money, then you're losing 8.1% of your buying power. In other words, you're worth less and less all the time. Or put money into CDs. Well, maybe CDs right now are 2%. Well, 2% sounds really good, except for the fact that inflation is 8.3% and it's being persistent. Even through next year, they're saying it's going to be persistent. Again, you're losing money. And by the way, you have to pay taxes on that 2%. So it's not even really 2%. Well, how about the stock market? Well, I'm invested in the stock market. And I can tell you that if you want to get into something right now where you don't want to, even look and see what your investments look like, or if you're worried about sleeping at night, then the stock market is today looking to me a little bit like going to Vegas. And I look at every day, I see, the predictions that the NASDAQ's going to go up and the Dow is going to go up. And then it does the exact opposite. It is a volatile, unpredictable market. You can't predict the bottom at this point, but it is going into recessionary times. And so let's say you could even get 6%, which I think is a pretty good conservative way of looking at the stock market. You're still under the rate of inflation. So let's look at real estate for a minute, okay? Real estate, to me, at this moment, is the safest investment that's out there. So risk is always involved throughout the board on these things. So two things. You gotta live somewhere, and you're either gonna be an owner-occupant or you're gonna be a renter, one of the two. Now, one of the things that we've seen at this point is more people are being thrown into the rental pool because of interest rates going up. And so that means rental appreciation. But still, if you're in a market like Oklahoma City or Tulsa that has had 22 years of solid increases, not a lot, but increases every year, then that's the miracle of compound interest. And I did a webinar about a week ago, or a little less than a week ago. And I did a number. I said, look, I'm going to take this investment that I have right here. That's basically going to be neutral cash flow. In other words, after expenses of like vacancy rates and maintenance and property management fees, we may not making but $10 or $20 or $30 a month. And I'm going to, hold it for 7 years. And I'm going to use the rate of about 5% of appreciation, which is lower than a lot of places in the United States. Well, the numbers come out to be like 15, 16%, even 20% before tax. And you also get deductions that you don't get with any other investment. The way that this is done is you're not going to be paying taxes on this money until you sell it, but it's going to give you something far beyond the rate of inflation. So right now, to me, the best place, if you have the money to invest, you have that excess capital and it's not going to hurt you and get you back to zero in your account. Real estate right now is the only thing that I'm seeing is beating the rate of inflation.